Hi, this is Stephen from Share Navigator with a trade alert on SPY. We're going to open up a new option trade position. We're going to sell put options. So first of all, let me talk you through the chart. You can see we're getting a bit of volatility today. The S&P 500 is down 1.2%. The VIX is up 12%. It's still kind of just trading at average. So the premiums have got a little bit better. And what I've drawn here is just from the peak to the 200-day moving average on SPY would bring you down to about 611 on SPY. And that would be about an 11% correction, which would be normal for a market that's had such a bull run. It probably won't get down that low, but I want to try and get my break even down as close to there as possible. Just in case this jobs data is the sign of something, let's say a string of data that might come along our way. Just a quick look then at some of the Mag 7. You can see how heavily they're all selling off. So our NVIDIA long put is going well now as well, by the way. The trade we put out in our example when we did the long put course, NVIDIA is down another 3.5% today, Tesla down 5. So the Mag 7 are getting pretty beaten up here as well. So I suppose the AI trade just unwinding a little bit. I think this will just be a normal correction, 5 to 10%. Uh, Probably won't get down to 610, but let's go and show you what put option we're looking at. So I'm looking at the December 19th expiry, which is 43 days away. And again, we want to be looking when we're selling puts at deltas below minus zero point 0.2. So I'm looking at actually the 620. I'm going to try and haggle here. We mightn't get filled, but we're going to try. I'm going to click on the bid price, and you can see that this trade would have a 94% probability of profit. It would get my break even down to about 616. Remember, the 200-day moving average is at about 610, so we're getting close to where I want to be. I don't think we're going to get down that low. We could do. But I like my odds in this trade. We're generating at the moment $431 per contract. Now, I'm going to ask for 500. So I'm going to put in a limit order for 5. I'm just going to go through your profit and loss tables. So for a 5% move up or down at expiry, look, we make our maximum profit. So SPY could fall 5% and we still make a profit. And then if we actually chose the 10% max move, it would only be if it fell 10% between now and expiry, we would be in some sort of a losing position from this point on. But statistically, that's 2 standard deviations away. It's unlikely to happen. It's not that it's not possible, but we have a risk management plan in place. And our risk management plan will be to roll this out and down into January, down to the 580 strike. And we can cover ourselves doing that. So if SPY gets as low as 630 on this trade, I'll be rolling this out and down to January and out to the down to the 580 strike. So I already have my risk management plan in place. So I'm going to click on order. I'm going to ask for 5. I know I'm not going to get filled straight away. And you can see that order's in there. So I'm going to let you know if we actually get filled on this particular trade.